రెపో రివర్స్ రెపో రేట్లను రిజర్వ్ బ్యాంకు తగ్గించింది. రెపో రేటు 35 బేసిస్ పాయింట్లు తగ్గించింది. రెపో రేటు 5.40%, రివర్స్ రెపో రేటు 5.15% తగ్గించింది. జీడీపీ అంచనాలను RBI సవరించింది. వృద్ధి రేటు అంచనాను 7% నుంచి 6.9% తగ్గించింది.
Food inflation rose to 2.4% in June from 2% in May and 1.4% in April, while inflation in fuel and light group moderated. Excluding food and fuel, inflation remained unchanged after having fallen by 50 basis points to 4.1% in May from 4.6% in April. The softness in inflation in this category was broad-based. Inflation expectations of households moderated by 20 basis points for the 1 year ahead horizon. Merchandise exports contracted in June 2019. Imports also contracted. And as the fall in imports was larger than that of exports, the trade deficit declined modestly during May-June on a year-on-year basis. On the financing side, net foreign direct investment flows moderated to $6.8 billion in April-May 2019 from $7.9 billion a year ago. Net foreign portfolio investment flows in the domestic capital market amounted to $2.3 billion during the current financial year so far, that is up to 5th of August, as against net outflows of $8.5 billion in the same period last year. India's foreign exchange reserves were at $429 billion US dollars on August 2nd, 2019, an increase of $16.1 billion over end March 2019. In view of these developments and considering that inflation for first quarter of 2019-20 was in alignment with its June projections, the MPC has retained its inflation projection at 3.1% for Q2 2019-20 and revised the projection for H2 2019-20 to 3.5% to 3.7% with 3.5% to 3.7% with risks evenly balanced, from 3.4 to 3.7% projected in June. CPI inflation for Q1 2021 has been projected at 3.6%. The MPC has revised downwards the projection of real GDP growth to 6.9% for 1920, and this consists of 5.8 to 6.6% for H1 1920 and 7.3 to 7.5% for H2, with risks somewhat tilted to the downside. This is against 7% which the MPC had projected in the earlier meeting in June. And at that time, the projection, as you would recall, was 6.4 to 6.7% for H1 and 7.2 to 7.5% for H2 of 1920, with risks evenly balanced. The downward adjustment in GDP growth projection was warranted by various high-frequency indicators pointing to weakening of both domestic and external demand conditions. On the other hand, the MPC was of the view that the impact of monetary policy easing since February 2019 is expected to support economic activity going forward. The MPC has voted for a policy rate reduction of 35 basis points instead of conventional 25 basis points. Let me explain the rationale underlying this action. Considering the evolving macroeconomic outlook, the Reserve Bank has been preemptive in its monetary policy actions and stance. Since February 2019, it has reduced the policy repo rate by a cumulative 75 basis points till today's meeting. In addition, it has changed the stance of policy from neutral to accommodative, which is effectively a further reduction in the policy rate since it takes rate increase off the table, while committing to either rate reductions or status quo going forward. Furthermore, sufficient liquidity has been provided to the system, resulting in overnight money market rates trading below the policy rate throughout July and August so far. In today's meeting, the MPC judged that with inflation projected to remain within target, addressing growth concerns by boosting aggregate demand, especially private investment, assumes the highest priority at this juncture. Against the backdrop of policy actions taken so far, the MPC felt that it is prudent to remain accommodative. While remaining consistent with inflation mandate, the MPC considered it necessary to calibrate the size of the policy repo rate cut to the dynamics of the situation. Accordingly, the MPC was of the view that the standard 25 basis points might prove to be inadequate in view of the evolving global and domestic macroeconomic developments. On the other hand, reducing policy repo rate, say by 50 basis points, might be excessive, especially after taking into account the actions already undertaken by the RBI. Reducing the policy repo rate by 35 basis points was therefore viewed as a balanced level of cut under the circumstances. Now I shall turn to some of the developmental and regulatory policy measures that we have announced today in the areas of financial markets, payment and settlement systems, banking regulation, financial inclusion, and credit flow to NBFCs. As regards financial markets, the Reserve Bank has been making continuous efforts to develop the market for state development loans, SDLs, in both primary and secondary markets. In continuation of these efforts, it has been decided to introduce stripping or reconstitution facility of SDLs, that is state development loans, in consultation with the state governments. In order to enhance efficiency and soundness of the payment and settlement systems, several measures are proposed. First, the National Electronic Funds Transfer (NEFT) payment system operated by the Reserve Bank as a retail payment system will be made available on 24/7 basis from December 2019. This is expected to revolutionize the retail payment system of the country. Second, all categories of billers except prepaid recharges who provide for recurring bill payments will be permitted to participate in the Bharat Bill Payment System (BBPS), an interoperable platform for repetitive bill payments on a voluntary basis. Apart from digitization of cash-based bill payments, these segments would also benefit from the standardized bill payment experience of customers, centralized customer grievance redressal mechanism, prescribed customer grievance fee, and the like. Third, it has been decided to enable diversification of risk and encourage innovation and competition by offering on-tap authorization to entities desirous to function, operate, or provide platforms for Bharat Bill Payment Operating Unit, Trade Receivable Discounting System, that is the TRADES, and white label ATMs. Fourth, the Reserve Bank will also facilitate the creation of a central payment fraud registry for tracking payment system frauds. Participants in payment systems will be provided access to this registry for near real-time fraud monitoring. This aggregated fraud data will be published to disseminate information on the emerging risks. In the area of banking regulation, it has been decided to reduce the risk weight for consumer credit, including personal loans, but excluding credit card receivables, to 100% from 125% or higher. Over the last 1 year, the Reserve Bank has taken several measures to enhance credit flow to the non-banking financial companies, NBFC sector. Now, the details of these are given in the Statement on Developmental and Regulatory Policies, which has been uploaded in our website, copies of which have also been shared with you. In continuation of these efforts, 2 more measures are now being announced. First, it has been decided to raise a bank's exposure to a single NBFC to 20% of Tier 1 capital of the bank as a step towards harmonization of the counterparty exposure limit to a single NBFC with that of the general limit. Second, in order to augment flow of credit to priority sectors that contribute significantly to exports and employment, it has been decided to allow bank lending to registered NBFCs other than MFIs for on lending to agriculture. Agriculture means only for investment loans up to 10 lakhs, micro and small enterprises up to 20 lakhs, and housing up to 20 lakhs per borrower.